Okay, so this is a video recap of the trade I did today on SNAP, Snapchat, or I suppose that's what it's called. The thing about this, this is still the watch list from last night. In it, I said stock exploded yesterday and today reversed and traded back up to yesterday's high. Today it traded to and closed at 39.39. If the momentum continues, trade the stock to 41.75 and 43. So here's Snap. Here's Snap in the last night's close. Well, let's go back a little bit further. Here's yesterday's, the first day when it gapped up on earnings, and you got into this nice big rising channel. Pulled back, next day Snap, but traded sideways all along. And so on it, I had said, if the momentum continues, 41.75. So 39.39 really was the entry level. And we can see here, this is, now I'm not showing the whole chart because I want to go through it so you can see how we traded this. But you can see here, this is the entry level, 39.49 for it, 39.50. And so that would have been the entry level for it. And as we go along, it did spike right at the opening and continued to go quite strong. But what happened then is that it got into this nice rising channel here like this. And as it moved along, continued in the channel. Very strong in the morning. And there was an opportunity to trade this several times. You can see here, this was your first pullback entry opportunity. Let's go back. Let's go back into the future or the past again. So it takes off. It pops up, and we can draw it. Now, when you're drawing the channel line, you want to draw it on the first pullback, which is here, and this pullback here. So we can't chase this up here. We traded over the 39.50. We didn't get a chance to enter it there, but it does pop and then pulls back. Now, to trade a stock on the first pullback entry opportunity, you look for the first candle to make a new high. First green candle to make a new high. So we get the first green candle here, but the next candle's red and then red. So we're looking for the first green candle to make a new high. So here's your next green candle, and it had a high of 40.86. The next candle is green and it breaks out above it. That's a good entry level, right around 49, 40.90 or so it would say. And we can see it's in this rising channel. So you take that trade right there on the first pullback entry opportunity. Then it continues on. And as it's going up, we're selling into these. What was my entry price? My first entry price was the 40.29. So this is where I got in, right in here on this first pullback. And then it popped, and I started selling it as it traded higher, 41.50, 41.75. I think I got some off, and up around 43, 42.70. No, I didn't. I stopped out. That's right. But I sold it all the way up. So we're in it at 40.29. Yeah, and it does pop. It gets up over 41.75. Now we've drawn the channel line and it stays in this channel, so we can just stay in this trade. Pulls back and spikes again. Here's the entry, first pullback entry opportunity. That's where we took it. Pops back up. Here's your second entry opportunity. Now, the first and the second are good opportunities. Gets to the top of channel, 41.75, pulls back to 41.50. Here's your first candle to make, first green candle. Here's your next candle to make a new high. So you could have entered this stock again over 41.65 or so. Sure enough, pops up to 42.25. Gets up close to the channel, you sell some more, gets to the top of the channel, because this is our channel line here. It's parallel to this one. And gets up to the very top, 43. So you would sell a bit of stock up there, of course, and then you get this long wick, candle's red, next candle's red. You want to get out of that trade. It does pull back, tries to go again, fails, and comes down. Now we can see that it has broken the channel line here now. And so we're out of the trade. We get stopped out and take our profits and run. Now I didn't ride it all the way to the top because not that I got spooked. I had a trading plan, and my trading plan called for a 470 stop, and it did trade up to that, or traded up into the 41. We sold some, pulled back, and traded through my plan. Now, the thing about it is, when I traded it out at that price, it's selling off sharply. Just trying to get the candles. We see it's selling off sharply. Breaks below my 40.75, spikes down to 40.60. I don't know if this thing's going to continue to sell off or if it's going to bounce. We don't know. And so that was my trading plan. To stay in the channel as long as I could, but if it got to 41, if it pulled back too hard, I wanted to lock my profit in, which I did. So that's fine. As it turned out, my trading plan was a bit too tight, and it did stay in this channel and ran another couple of bucks. But I'm not complaining. I made $1,300 on the trade by buying it here and selling it up here, and then getting stopped out. It did continue to go. There was another opportunity to trade it here and sell it up here at 43. And then now it's, and then it came off in a downtrending channel, and now just trading sideways as you would expect for the rest of the day. Maybe at the end of the day it'll take a pop. We were looking at trading it here, but we got these two big wicks up and failed to get through and now backed off. But the point is here, I had a trading plan, I executed on it, and when I did, and it kept going, I don't care, because I traded to my plan, I stuck to my plan, and I made money on it. Did I leave some money on the table? Sure. In hindsight, I did. But how do you know that it's not going to roll over and come off sharply? Especially if the markets were selling off at that time, which they were. We can see that the SPY was coming off. So that was my plan. I stuck to it, and I made money. And that's all that. Oops, where did it go? Here we are. And that's what's important. But if you had stayed in this trade, you can see what a perfect. There's a lot of really good patterns in this chart to trade. So we're in this channel. You stay in the channel, let it run. Here's your first pullback entry opportunity. Here's your second pullback. Absolute classic type patterns. And these pullbacks are much more reliable with the higher the price of the stock. Not the cheaper stocks, not necessarily as good to trade those patterns because they're subject to manipulation. But you get a huge stock like this that's trading 1 million shares every few minutes. Then you can trade. You're not worried about somebody coming at it with a huge price and short and knocking it back down. So that's the trade we got in here from the watch list. When it popped, got to the top of the channel, or 41, it started to stall out. I get stopped out. But there's your entry up on the first pullback, pop. There's your entry on the second, pops. This is a 1, 2, 3, 4, 5 wave move up. Then you get this big 3 wave corrective. And now just consolidating, 5th wave consolidation. That's the trade.